SPY, QQQ, and DIA all ended the day with key volatility zones being breached. Let's start with the SPY first, and in today's video, I want to share what I think is the likely course of action for the major index markets over the next few weeks. Is it a double top, or do we continue breaking to new highs? Now let's start the conversation first with the S&P 500, and I think it helps to zoom out to keep the big picture in mind. What we have right now is a double top near the 1618 extension. From a technicals perspective, this would make a lot of sense to start to see some sell-side activity. We've tagged the 561.50 level now 2 different times, both times once we saw the edge signal confirmation, along with momentum shifting, we had that further down decline start to kick in. So that's what I'm looking at inside of the S&P. However, I don't think that's going to happen right away. The reason for that, if we zoom into something like a 5-minute time frame chart, today's selling activity took us all the way down into our key volatility box model zones. The S&P breached its aggressive volatility box models before you can see price started to stabilize here. If you take a look at the Dow, same idea, breached our aggressive models. Very quickly, buyers stepped in, bought up the levels near 409. The Qs were the one market which stood out a little bit in terms of volatility, where we breached not just the aggressive, but also our conservative models right down here near 459, also have the fib level near 458, and you can see that immediate bounce where buyers were very happy to buy this 459.50 level. Finally, you take a look at the Russell, and the Russell here, same idea, except the Russell, unlike the other index markets, continued to drift down lower, and we don't see that same strength with the buyers as we saw in the 3 other major index markets. So bringing this back to the S&P, the Qs, and DIA, the S&P has tagged its 1618 extension one more time, and it would make a lot of sense to start to see a decline here. I still think tomorrow you're likely to see buyers step in, maybe a weak side bounce or a rally. That might actually be a good one to potentially short unless it's one of those massive green candles. But otherwise, I think we're likely to see something similar to what we saw last time around. A few candles of up movement before we have some sort of catalyst that takes us back down, whether it be earnings or something more macro related. If you take a look at DIA is near its 200% extension, whereas the S&P is just near that 1618, and this is the COVID swing high to swing low. So again, another reason why you'd expect some pause, but the Dow doesn't look as juicy, is I guess the best word to say it, as the S&P does for that short side setup. The Qs here look like momentum is starting to shift. The way I'm looking at the Qs, if we zoom out, let me try and use this trend line, is something that looks more like this. A channel in which we're bouncing back and forth, and now I'm looking for that downside continuation movement. We entered the channel here, and I think we're towards the top end of this channel. One edge signal, momentum crossed. The bulls tried to recapture, and today the sellers just smacked them straight back down. So across the board, SPY and QQQ look like they're giving you signals for a potential short. DIA, not so much to me compared to these other 2 markets. And you look at IWM, and IWM looks somewhat similar to the Qs with that bearish channel. Just the Qs and the S&P to me look a little bit nicer and easier to trade. I hope you found this video useful for those of you looking to try and make sense of the major index markets. Again, for tomorrow's short-term activity for all Volatility Box members, I'm looking for a bounce, a short-term bounce. And one thing you might find useful if you're looking for that specific trigger for tomorrow morning is to just use the Cumulative Tick Pro and take advantage of any of these buy-side setups, but when you get them tomorrow morning, or if you start to see the ticks give you sign of price action starting to reverse, even on the free version, you might use something like consecutive ticks increasing for the first time, something where we already have this bias of a long side setup. Give me some trigger, even if it's something like a momentum cross or the market internals that tells me that, hey, I'm okay to buy. Take care, everyone. Good luck trading. Again, for a day trading method, I think tomorrow, short-term bounce is what I'm looking at. Bigger picture, I think the double top here makes a lot of sense. I think everyone's looking at it, which is why I think you'll have a few days of a fake out before you see that ultimate push down lower. I'll see you in our next update. Take care, everyone, and hope you had a wonderful weekend.